Oil prices fall as U.S. Fed interest rate hike raises fuel demand concerns. Oil slipped on Thursday as an increase in U.S. interest rates pushed up the dollar and heightened fears of a global recession that would crimp fuel demand, though losses were capped by concern over tight supply. The Federal Reserve hiked interest rates for the sixth time this year on Wednesday. 75 basis point 0.75% rate hike is the fourth consecutive hike of its size, though inflation remains at a 40-year high. Mixed economic results suggest that financial pressures could soon ease for consumers. Even so, Fed Chair Jerome Powell is committed to hiking rates until they're sufficiently restrictive to beat down inflation. On Wednesday, the Federal Reserve hiked the federal funds rate target by another 0.75% in its fight against inflation. The U.S. Central Bank has raised rates 6 times this year, with November's hike marking the fourth of this magnitude. The Fed's rate hikes continue as inflation stubbornly clings near 4-year highs. In September, consumer price index changes measured inflation at 8.2% year-over-year. Even after removing volatile food and energy prices, the index experienced one of its most significant jumps since 1982. As inflation and rate hikes bash consumers and investors from all sides, many grow weary of higher prices, but reprieve remains elusive. According to its recent policy statement, more Fed rate hikes lie ahead. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. The statement reads, "The committee anticipates that ongoing increases will be appropriate to attain monetary policy that is sufficiently restrictive to return inflation to 2%. Powell also acknowledged the spectre of recession lurking in the background. "No one knows whether there's going to be a recession or not, and if so, how that recession would be," he said. However, he added, "It's the Fed's job to restore price stability so that we can have a strong labor market that benefits all over time." The oil balance of power. Oil production continues to generate controversy amid the global energy crisis. The Organization of Petroleum Exporting Countries, OPEC, and allied countries such as Russia, known as OPEC+, recently decided to cut oil production in November abruptly. The OPEC+ alliance, led by Saudi Arabia and Russia, announced that it would cut its crude oil production by 2 million barrels per day, double what was planned in the most significant decline in oil supply since May 2020. Producing countries were seeking a recovery in oil prices that had fallen to around $90 from $120 3 months ago due to fears of a global economic recession. The cut was announced by Iran's Deputy Oil Minister Amir Hossein Zamanini after a meeting between OPEC and 10 other oil producers in Vienna in early October to give a signal of strength to the market in a very complex environment of falling prices, doubts about the evolution of demand, production problems and sanctions on Russian oil due to the Russian invasion of Ukraine. This production cut provoked resounding opposition from the West, with the United States and the European Union at the forefront since, during the current energy crisis caused by the war in Ukraine and the extreme inflation plaguing many countries, the decision meant a rise in oil prices, aggravating the current situation. It is well known that with reduced production and less stock on the market, the logical consequence is a rise in oil prices, which is not beneficial given the current situation. U.S. President Joe Biden said he was disappointed with OPEC+'s decision and considered it short-sighted. The president is disappointed by OPEC+'s short-sighted decision to cut its production quotas while the global economy is grappling with the continuing negative impact of Putin's invasion of Ukraine, the White House said. In this context, Biden ordered the Department of Energy to release 10 million barrels of oil from the Strategic Petroleum Reserve and will continue to order reserve releases if appropriate to protect American consumers and promote energy security, as the White House itself reported. The U.S. also explained that in the current context, where energy supply is vital, this decision will have the greatest negative impact on low and middle income countries. The United States opposed the cut in oil production, which pitted the U.S. against its allies in the Middle East, such as Saudi Arabia and the United Arab Emirates. On previous occasions, Joe Biden had urged Saudi Arabia and the United Arab Emirates not to cut oil production in order not to make the market more expensive, but U.S. pressure did not bear fruit. The two Arab countries distanced themselves from the U.S. and wanted to show that they were not following U.S. dictates. This situation opened up a scenario of cooling relations that also had to do with a certain disenchantment within the Arab world over what they saw as a lack of interest in the Middle East on the part of the American giant, which was more focused on turning its sights towards Asia, where there is a solid political and economic contest with China, the United States' great geopolitical rival. Moreover, reporters understood that the United States, with its new way of generating oil through fracking, was already less dependent on the region for energy and less interested in the issues that concern the countries in the area as they were less dependent on Arab crude. Saudi Arabia and the rest of the OPEC member states wanted to distance the decision to cut production from a possible political motivation and justified the decision on purely economic grounds. However, it was considered undesirable from a Western perspective for the leading oil-producing countries to align themselves with Vladimir Putin's Russia at a time of general international condemnation of the invasion of Ukraine. In this regard, Suhail al-Mazrouei, the Emirati energy minister, pointed out that OPEC Plus is a reliable technical organization for balancing oil supply and demand detached from political considerations. However, even if it were only economically motivated, the rejection in the West was automatic. Other opposing voices have followed suit, such as that of India, which could thus become the first renowned member of the cartel of oil consumers that both the US and the EU were calling for to confront the supposed market monopoly of OPEC Plus. India thus entered fully into the circle of disagreement over the OPEC Plus decision. India's oil minister Hardeep Singh Puri this week urged the oil alliance to consider the impact of its decision. This shows that India has aligned itself with the US in opposing OPEC Plus' decision to cut production. Several analysts see this move as the activation of an alliance of consumers and those affected against the oil producers' organization to balance the power games established around crude oil. This Indian stance, with a less harsh tone shown in the opposition of the United States and the European Union, can be interpreted as a move to create a group of consumer countries to act as a counterweight to the power exercised by OPEC Plus, and to form a more robust common front against the OPEC Plus monopoly, which is of no benefit in the current situation marked by the energy crisis and unleashed inflation. Similar positions to the Indian position are now expected to emerge from other countries, so the disagreement over the OPEC Plus decision does not look like a disagreement between Washington and Brussels and the major oil exporting countries. India relies on imports to meet 85% of its oil needs, and the country consumes around 5 million barrels of oil daily, which is almost 5% of global consumption, so it is hit hard by this issue. Interestingly, Russia became India's largest oil supplier in October, surpassing Iraq and Saudi Arabia with 946,000 barrels per day. Russian crude accounted for 22% of all Indian imports last month, while Iraq's share was 20.5% and Saudi Arabia's 16%. India is the world's third largest importer of crude oil, with Russian fuel purchases in October 8% higher than in September. India was a small buyer of oil from Russia. After Western countries began to reject Moscow's crude, the Asian nation became one of the leading destinations for the Kremlin's exports, along with China, something to be expected in the Chinese case due to the economic and trade agreements reached between Vladimir Putin and Xi Jinping shortly before Russia invaded Ukraine. In this case, the claim for Russian oil is that it is much cheaper than what the Middle East and Africa offer. If anything, the Indian minister's comments urge the significant producers to review their stance, which saw the interests of OPEC Plus countries, which increase their profits by reducing oil production and rising prices from lower stocks, prevail over the interests of other affected countries, such as India.
Oh man, not another election. Why do we have to choose our leaders? Isn't that what we have the Supreme Court for?
If you're gonna vote, we'll need some photo ID.
But I lived here all my life.
Stopping all Americans from voting is for the protection of all Americans.
But I'm a 40-year-old white guy who didn't go to college and gets all his news from monitors at gas stations.
In you go.
Barack Obama, I don't know. I already got one wife telling me to eat healthy. Plus, he promised me death panels and Grandpa's still alive.